It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. And with me in the KFG studios, my business partners and fellow CFPs, Kevin Korhorn and Josh Gregory.
We are celebrating life insurance, with September being Life Insurance Awareness Month. And life insurance really is a must-have when you're raising kids, you have a mortgage, or you're building your financial nest egg and you have some goals that you would like to achieve. But what about when you retire? Do you still need life insurance, or is it time to drop it? So on this episode of the Wise Money Show, we're going to explore when life insurance makes sense after retirement, when it doesn't, and how to make the best decision for your financial life.
That's right. That's right. We are here. If you have any questions, have any needs, we are here for you. You can call or text us, 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can find us, learn more about the program, about the firm, leave questions there as well. And then, of course, all over social media, wherever you're at, we are there as well. You can engage with us that way. Search the Wise Money Show. So yes, Life Insurance Awareness Month, that is September, and I get it, even though there's a month for just about everything out there, no one wants to think about life insurance. And so this is one area of your financial life that maybe you just sort of pretend isn't there, or you're just, I don't know, not too excited to talk about tax planning and finding ways to save money on taxes. Yeah, I like that. Or investment strategies, that sort of thing. I'm all for that. But life insurance, yeah, you often need a nudge. And so we're getting into that today.
Man, I remember early in our marriage, it was hard to talk about estate planning and life insurance.
Yeah.
Andrea is not a fan of talking about death for maybe obvious reasons, but man, it took we had to schedule it. We had to be in the right frame of mind, had to, approach it gently, and it also needed to be a very limited conversation at that time. But man, can you imagine if you just didn't have it?
Yeah.
Because we've all known people who maybe a main breadwinner in a household has passed away, and the only thing that helps hold all of it together financially for the survivors is the life insurance proceeds.
There's some financial professionals out there that have actually said you can solve any financial problem with life insurance. Not true. On the other end of the spectrum, there's some financial professionals out there that treat it as an afterthought. Well, the investment strategy is really what's important. Oh, well, can you help me with life insurance? I don't know. Just go get something online. Treat it like an afterthought. That's not true either. There's 6 areas to your financial life, and the big idea is to not treat them separately, even though culture and society sort of does that. No, you need to fuse them all together and bring synergy to them. Protection planning is one of them, and life insurance is one of the major life risks, major financial risks that you need to have a plan for and a strategy for within protection planning.
Yeah, so if you do have a life, you have a financial life. If you have a financial life, you have 6 areas of that life. And Mike, you said society or culture kind of separates out these various areas, but they're very different disciplines, which is why, of course, we're very biased as certified financial planners. Everyone needs a financial planner to tie together these various disciplines and make sure they're working together for your benefit.
Yeah, absolutely. So, and one obvious way that these areas intersect, or that protection planning, of course, is connected to other areas of your financial life, is when it comes to, well, what are your needs with life insurance during your career, and how do those needs change when you retire? Retirement planning or long-term planning, that's one of the other areas of your financial life. So life insurance, its main purpose, if you kind of search it out there, it's income replacement. We've always said it's to fund unfunded goals. I think both of those, yes, both and. During your career, that's fairly obvious. If you've got other people dependent upon your income, or you've got a mortgage that, you want to pay off, you've got college goals for the kids you want to save up for, retirement you want to save up for. During your career, those goals are not funded yet. And so if you pass away, you need an injection of capital or cash to help you fund those goals. But when you get to retirement and you're financially independent, the need for life insurance can change.
Yeah, and really it changes throughout your life. So before you're married, what do you need? Once you get married, what do you need? Once you have kids, what do you need? Once the kids are out of college, what do you need? And then when you retire, what do you need? So many, if you look, it's certainly not a static number.
Yeah.
And it changes over time. And then there are some folks, when you look, again, life insurance is a tool. So people are like, oh, do I like life insurance? Do I not like life insurance? I'm like, no, it's just a tool. I was talking with a client yesterday, and they had a long-term relationship with an advisor. And this advisor, they finally left this advisor when he would not stop talking to them about life insurance. So he had a product, not a process. And you can think of lots of organizations. There are, mutual companies in the Northwest that, they just have a product, and if you're a nail and they're a hammer.
Yeah.
So look, this is the solution to all of your financial and life problems. And really, if you use it strategically, it can be a great tool. It can cover you to make sure, because the thing that you have to realize is I'm going to transfer the risk. The risk is if I die before I accomplish these things financially, the risk is that my family is not only emotionally devastated, but they're financially devastated. So what life insurance can do is it can make sure that you are not financially devastated. When you think of your mind, and it can be helpful to if you're searching for financial peace, if you will.
Yeah. Yeah.
I think it's worth even kind of taking inventory of what are the things that we do ask life insurance to do, because philosophically, you need to know what is the job that tool was really designed for. And to me, early on in your marriage, in your child rearing years, that sort of thing, you may still have a mortgage, and life insurance can instantly wipe out a mortgage when you otherwise would have stuck around and you would have paid that mortgage faithfully month by month, and it eventually would have gone away. But if tragedy strikes, you can, at the time of the need, create the solution as well. Maybe you've got kids that you want to help educate. Life insurance is an instant way to build that education fund that you otherwise would have accumulated over time. Your spouse who is still living and, hopefully finishing out their working career and eventually want to be able to retire. Life insurance is a way to instantly create a small retirement nest egg that can grow into a big one at the right time as well. All of these things. And then on top of that, you mentioned, Mike, that it's often thought of as primarily an income replacement, that it can create a pool of money that kicks off income or can be drawn upon as needed when that paycheck goes away because of the tragedy. All of those things matter. And the question I think that often gets asked, and the whole reason we have a show about, well, does life insurance still matter? Is it still needed when you get to retirement? Is that's the age when a lot of those needs have already been met.
Yeah.
And by definition, you don't need to replace a paycheck anymore because you chose to walk away from a paycheck when you got to retirement. And so it's an important milestone for you to be asking that question. All right, has my life insurance need changed by the time I get there?
Okay, so we're obviously going to get deeper into that, but let me ask you, if that life insurance need is so great for so many people during their career, does that mean do you like life insurance through your employer?
Do I like life insurance from my employer? It depends, because if I have a bunch of life insurance through my employer, there can be imputed income, and I can imputed think given income. So it's income that you didn't really get, but you get to pay taxes on it. So if you think you love paying taxes on the income you actually do get.
I thought you were going to talk about your health, right? Depending on your health situation, you can get insurance. If your employer offers it, you can get insurance from your employer really without needing to to go through a medical exam.
Well, that might be a situation where if you can get insurance through your employer and then you can actually make it permanent and portable, that would be the best case scenario if you're uninsurable.
If you're healthy and your health history is pretty clean, then a lot of times you can go in and lock in life insurance, lock in the life insurance rate that you're getting outside of your employer. And that makes it a little bit easier if you transition jobs and whatever, your life insurance isn't at risk. So, all right, we're getting to the question, do you need life insurance when you retire? That more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern time every Saturday morning, and also on podcast at the same time. Also on a couple local radio stations at the same time as well, which is why it is a talk show. There's breaks and all of that's done for the radio program. But we've got Next Wise Step videos that air all throughout the work week right here on this channel as well. We've got direct made for YouTube content that all is designed to help you take your next wise step in your financial life and viewing your finances from that comprehensive lens that we talked about at the beginning of the segment. So if that sounds good to you, make sure you hit that subscribe button, turn on notifications so you're made aware every time we drop new content. If you like the content, we appreciate it. Thank you. Yeah, we had just a little bit of time before that break, so I'm like, well, I'm not going to get into the next topic.
So do you want to talk about employer health insurance?
Yeah, why not?
Josh, can you move your microphone more in front of your face?
Like preferably where you just cover it all up.
Well, no, Lindsay's onto something here because Josh was looking at you
And it was
and
quieter.
talking. No, I didn't realize how
sounded
awful
echoey.
it was until Mike started talking. And then I'm like, wow, Mike is crisp and clear and in my ear. And you were like,
Echoey or distant or
it's
whatever.
like in the back of a cave with fuzz in your mouth.
Other than that,
it
was great.
Threw a blanket under a pillow.
all right.
What do you think of the content that was coming out of my mouth?
I couldn't hear any of it, actually. It was so distracted.
It was completely unlistenable.
I was captured by the content.
All right, here we go. Second segment. We'll get into different types. We'll start with that employer life insurance and then get into the meat. Here we go. If you're offered life insurance through your employer, is that a good thing? Do you jump on that? And really, if you take life insurance through work, does that mean you're done? That's it? You don't need another policy? Or is it better for you to get life insurance on your own outside of your employer? We're helping with that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com is where you can find us, and then all over social media. Engage with us that way. Just search the Wise Money Show. So there's a difference between Kevin, you said it really well, that there isn't really a static need for life insurance where, okay, when you're 25, you can do some calculation or have a discussion with the financial planner, come up with, all right, here's the type and the amount of life insurance that you need, and then it's stable. It's going to be that forever. No, your marital status, whether you have kids, what your financial goals are, all of that sort of stuff certainly is going to influence the amount and the different type. But if there's for many people more of a need for life insurance during your career, and a lot of employers offer life insurance, whether it's just a flat amount, 50 grand, 25 grand, something like that, or a multiple of income, which we can get into that as well. Does it make sense to get life insurance through your employer? Not only is it Life Insurance Awareness Month right now, a lot of people have open enrollment for their benefits through work coming up next month or the following. Is it wise to get your life insurance through work or not?
It can be. So it depends on a number of factors. Number one is how insurable are you? Have you had a health event that makes you uninsurable? Because if you're uninsurable, getting life insurance through your employer may be one of the only places you can actually get life insurance.
That's right.
So, and then the other thing that I would look at is what does it cost per thousand? So think if I'm going to Costco and I'm buying meat, what does it cost per pound? Well, with life insurance, you're looking at it per thousand, knowing that when you buy it through your employer, you're buying something called annual renewable term. So every year that price is going to go up just a little bit. And so you say, well, should I get it through my employer or should I have my own outside of work?
If you can go out and find, and in group life, that's what it's called. It's a category of term insurance, temporary insurance. You have it for as long as you're willing to pay for it. But that price can change every single year. Some employers, it's bunched together, age bands or whatever. But that price is not fixed. It's going to change. If you can go out and find, if you need term life insurance, that's the right type for you, which for many people it is. Love the idea of buy term, invest the difference. If you can lock in that price for a term insurance for as long as you need it, and that price doesn't escalate, to me, I think that's preferable for many, many people. Plus, when you switch jobs, you don't have to worry about, oh gosh, I'm uninsured for this pocket of time, this window of time.
Yeah, that's what a lot of people don't stop to think, that you might be working for that employer right now, but will you be in 2 years? And what happens to your life insurance if you leave, right? Do you get to take it with you? That would be a portable type of a policy. Or can you convert it from that group policy into your own personal or individual plan that is permanent insurance if something meaningfully changes within your health? So, you know, a lot of people, they just look at the price, how much is going to be pulled out of my paycheck each pay period. And if it seems affordable, I need to have some life insurance, so they just throw something in place. And it may not be the right amount, and they may not really be dialing in or paying attention to what the features of that plan are, what their options are when they leave.
Yeah. Okay, before we get into kind of the headliner topic of today, you know, we're talking about group life at the moment. That's a, you know, through your employer, that's a form of term insurance. Term is one category of life insurance, and think of that as temporary. You're renting the coverage for as long as you need it. So if you believe your financial situation, if you need life insurance while you've got young kids and little dependents running around, and you've got a mortgage and you haven't filled up all your savings accounts and retirement buckets and all that sort of stuff, you have unfunded goals. But at some point when you retire, the kids will be out of the house, the mortgage will be paid off, you're going to have a fully funded retirement fund, and those goals will all be met. You probably only have a temporary need. You need insurance during your career, and that's best solved typically with term insurance. The other type, broad category of life insurance is permanent insurance. And as the name suggests, this is life insurance that is there to protect against a permanent need, meaning you're always going to have this life insurance need. And whether it's during your career or through retirement, this life insurance is designed to stick around. You're going to pay a lot more for that. There's an investment component to it. And it's got a lot more bells and whistles. So just wanted to set the table on that. I don't know if you guys have any more comments or if that sort of skims the wave. But then getting into, okay, what are the situations when you might need life insurance in retirement? Can I start? I know I've been going for a while here, but I had an individual who's been retired now for about 10 years, but he was fortunate enough to have a pension from his employer. It wasn't a government job. It was a manufacturing type job, and he ran the plant. He helped run the plant. So key person. And he was eligible for a pension. Well, when he retired, we had making the decision on how you draw your pension, whether it's on your life only or if there's some sort of beneficiary to it. It's one of the biggest financial decisions you're going to make in your life. So presented this concept to him of, do you want to take a permanent reduction of this monthly pension benefit, which for him was about $3,000, and the reduction would be about $600 a month. Do you want to take a permanent reduction to your life insurance or to your pension so that it continues if you pass away, it's there for your spouse? Or do you want us to quantify the difference? How much money are you giving up every month, and what would be the benefit? And buy an equivalent life insurance policy, hopefully for something cheaper than $600 a month. And we talked about, this is a strategy called Pension Max. We talked about the pros and cons of this. And it made sense, financial sense, it made sense to get the life insurance. So draw the highest pension, so the life only, that if he passed away, that pension was going to go away. But if he passed away, there'd be this big life insurance policy. And so we got the life insurance in place. He ended up continuing to work a couple more years. Unfortunately, his wife developed cancer, brain cancer. It was awful. And she had a huge surgery, and was able to, to fight the cancer for a couple of years. But she passed away in, I think, the second year of his retirement. And he was able to just drop the life insurance. Instead of permanently reducing the pension for a benefit for his spouse that would have no longer been there because she passed away. Instead, he opted with more flexibility, more control, had this life insurance policy, and was able to stop the life insurance policy and continue this higher pension amount.
Yeah. So, Mike, you're making the case that there is such a thing as a permanent need for life insurance.
There can be.
Well, because what I tell folks that have a pension, you are going to be paying for life insurance no matter what. You're either going to do it privately on your own, or you're going to do it through the pension fund. Because through the pension fund, there's a reduction in the amount that you would get. The question is, what would your spouse prefer? Would your spouse prefer to get a monthly payout when you die, or would they prefer to have a lump sum of money when you die? And oh, by the way, if you are both gone, with the pension, there's nothing there for the kiddos.
That's right.
And if you have life insurance. So this same thing happened with my folks. So my dad retired, my mom died. We had done this pension max strategy, so Dad was taking the maximum. Now, he could have dropped the life insurance, but I had some advice early on when there was a situation where these folks were older and the spouse died and there was life insurance. And I was talking with his advisor, and I said, hey, I probably should drop the life insurance right away, right? And he said, no, keep it. That guy's going to get remarried. I'm like, I don't think he's going to get remarried. He was remarried within 2 years. And so there are some amazing benefits to having life insurance later in life, especially if there's a second marriage involved.
If there's a blended family. I mean,
Yes.
So we're hitting two of the main reasons why you might still need life insurance in retirement. One is if you have a pension replacement. But the other is some estate planning equalization and not optimization. We'll get to that as well, but equalization if there's a blended family or if there's a small business. Gosh, I'm getting into a lot of it. So Josh, and I'm stealing some of your thunder. So we've got a lot more to hit with do you still need life insurance in retirement, the situations when you might, that more coming up on the Wise Money Show with Korhorn Financial Group. All right. Sorry for just going on a...
That's right.
Rant.
Teased out what's coming.
All right. Third segment. Short break.
This is good stuff.
Here we go. So let's just, have some banter and continue to delve in that. So not everyone needs life insurance in retirement. Not everyone does. Many people need to rent the coverage, need term insurance during their career, and are self-insured by the time they get to retirement. But there are some circumstances and some financial planning strategies where it may make sense to still have some in retirement. We're helping with that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on podcast. Wherever you listen, search the Wise Money Show, subscribe to it there, rate the program there as well. We appreciate it. All right. So a lot of people, right, have life insurance need during retirement. During their career. By the time they get to retirement, they don't need it. But there are some creative reasons, real reasons, financial planning strategies where it would make sense to have life insurance in retirement. We just hit a couple. Josh, keep going. Keep us going. Go to either the next one or expand on one of the ones we've already hit.
Well, yeah, at the end of that last segment, you were mentioning situations where maybe if you passed away in retirement, there is some complexity created because of being a small business owner, let's say, where maybe you have children that are or are not involved in the business, but you want to make sure that that business doesn't have to be sold necessarily. Maybe you want to keep it in the family and pass it down to whatever children or grandchildren have been active in that business. But if that's the main asset that the family owns, that you own, that would be left behind, it creates this awkward spot because if you want the control of the business, the ownership of the business to pass down to one of your kids, but maybe there are other children that have not been involved, and you don't want to disinherit them either.
Yeah.
You get into a situation where everybody has to make a decision, regardless of whether you're a business owner, on what do you consider to be equitable with your estate. And I choose that word intentionally. I don't necessarily mean equal, because it is possible that certain assets are more valuable and you intend for them to go to the people that help build them in this small business situation. But what is it that you want to go to the others as well? And you have to kind of decide, well, if I don't have other assets that would kind of balance my estate in the way that I envision or that I want to, life insurance is a way to create more estate. It creates more liquidity. It can enhance an estate, make it bigger than it otherwise would have, or just bring more flexibility so that you can kind of levelize or, again, figure out what you want to be equitable between all of your different beneficiaries. So life insurance is a tool. It's a way to create an enhanced inheritance to certain people or just to your estate in general.
Okay, so we've long discussed the if you have a business and that need. I think newer or maybe less on people's minds or radar is for the same reason, but with a house. Or whether that's a second home, vacation home, lake property. I was just working with someone where there's a lake property in the family, and there's that mom and dad own, and there's 2 kids. One of them can probably afford it. The other one can't.
Mm-hmm.
And get this is tragic. You see it all the time. The siblings don't really get along. So the idea of sharing the lake property, because it's going to be left 50-50,
Mm-hmm.
the idea of sharing the lake property, it doesn't really seem enjoyable.
Mm-hmm.
And so mom and dad, who are now in the later stages of life, are sort of seeing this and saying, we don't want this to be this issue with the family, either financial burden or relational sort of baggage. We're just going to sell it and divvy up the money. Like that's sort of, and it's not really an empty threat, and it's not really a threat. It's more so that seems like a better solution than just leaving it and, hey, you guys fight over this thing. What if instead there was life insurance, either to help with the buyout of the other person, to provide some resources, or some way of kind of smoothing over whatever the financial bumps and hurdles could be in that emotional decision. Personally, with how values of real estate have significantly gone up, I think we're probably getting back to a stage where leaving a house isn't this immediate, well, we're going to sell it and divvy up the cash. It might be, hey, the grandkids can't buy a house. And so we're like, a house is something that's passed along from generation to generation. It's possible we get back there.
Mm-hmm.
And if we do, having some liquid resources to level it out or to buy out other folks, I think could be more a thing of the future.
Well, and maybe one more scenario, taking this, the lake property idea, I've seen some families where, they do decide that they want to maintain the house. They want to keep it. It has been, a source of amazing memories over the years. It's a gathering place to get all the generations together. And the thought of it being gone and out of the family, it would be heartbreaking to them. And so the oldest generation can sometimes use life insurance to essentially endow the house. So it doesn't have to be sold. A lot of these lake properties, they are expensive to maintain.
Oh, yeah.
And the real estate taxes alone can be, tens of thousands of dollars at times. If that's the case, how do you afford that? Because is everyone going to pass the hat and everyone's throwing a few grand in each year? Some of the kids might be able to afford that. Some might not. And so by creating a pool of money to cover those expenses, you essentially make it sustainable to continue to stay in the family.
And just a word of caution. The pass the hat, we all get along, that'll work. There's a chance. odds are that works for a year or two. And then by the third time it's time to pass the hat, someone's going to start doing the math. Well, I only was able to make it up for 3 weekends this year. You were up for 7. But then the person that was up for 7 was like, I know, but we took care of all the leaves. You weren't there when the gutter broke. The math is going to start. So what might seem like a great plan when everything's hunky-dory is the official Midwestern term, there's strife that can come up very, very easily. Having some life insurance there can help with that. What about this other one? This is another newer trend. What about leaving a tax-free inheritance? Right now, Secure Act 2.0 has forced everyone's hand with pre-tax retirement accounts. It's now the 10-year rule that if you're inheriting a pre-tax retirement account from someone that's not your spouse and you don't meet one of 3 other exceptions, you have to withdraw those dollars over a 10-year time period. That can be extremely taxing. You could see your parents avoid and delay tax at the 12% tax bracket all their life. All of a sudden, for those dollars to land in your lap and those dollars to push you into the 24% tax bracket, double the tax. And so what if there was a way to have an inheritance that is received essentially income tax free? Well, but that's life insurance and that's expensive. Yeah, the strategy is, and again, this doesn't apply to everyone. It's just a strategy worth considering to see if it makes sense for you, using the pre-tax retirement accounts during your lifetime to pay the premiums for this life insurance policy that then gets inherited income tax free.
And maybe this is a strategy that gets stacked on top of a more traditional approach of, should you be doing some Roth conversions along the way to neutralize the tax bill while you can pay 12% and avoid your kids paying 24%? So some of these strategies can, coexist. They can be combined together. That's why all of these ideas, they fit within your financial plan. We don't know exactly which strategies are going to make sense for you, but that's why you sit down with your certified financial planner and consider your unique situation.
Yeah, I mean, think of it as in that situation, it's a leveraging tool. Do I leverage dollars? Do I take money out of my pre-tax, pay taxes on it, use those dollars to put into something that could not only leverage dollars for my kids, but the way that these policies have evolved, there's also things if in the event that I need long-term care or other different needs.
Yeah, if you would have asked me before this conversation, hey, has the need for life insurance in retirement or later in life, has that stayed the same, or has the need gone down or gone up? I would have said, I don't know, probably stayed the same. After this discussion, no question. It feels like it's increased. The need for life insurance in retirement feels like it's increased. But that's just a broad statement. You have to apply it to your unique financial situation. Who can help you do that? Working with your certified financial planner, looking at all 6 areas of your financial life. All right, we've got more coming up here on the Wise Money Show with Korhorn Financial Group. All right, so there's a good break. There's 2 more questions with life insurance we could hit. I feel like probably makes sense to do so.
Are there more scenarios to unpack?
There could be.
I think there are.
Okay, then that answers the question. Let's keep it going. 4th segment, we'll pick it up with scenarios, and then we'll either get into, okay, if you don't need life insurance in retirement, what do you do with your existing policy? Yeah.
Sounds good.
Okay. All right, here we go. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on the Wise Money YouTube channel. Go check it out. Search the Wise Money Show there. Subscribe to it and turn on notifications there as well, because not only do we have this talk show that airs every single Saturday right there on the YouTube channel, we've got Next Wise Step videos that air all throughout the work week right there as well. 8 minutes long, 10 minutes long, shorts as well. Things to, like a perspective of one financial concept, applying it to your financial life from a comprehensive financial planning perspective. So Go to YouTube, search The Wise Money Show, subscribe to it there. Talking about life insurance and how the need for life insurance shifts throughout your life, and how that need is sort of a on-the-fly epiphany here. The need for life insurance in retirement, well, I would still say is rare. Most people need life insurance in a consistent amount during their career to fund unfunded goals. The reasons why you might need life insurance in retirement have increased. You need to be working with a fiduciary, someone that's doing financial planning, someone that doesn't see life insurance as the solution to every financial problem you can come up with, someone that has a process to work through your financial situation and goals and determine, all right, well, what's the need here? What risk exists, and what's the right way to transfer or manage that financial risk? Josh, what are some of the other times or scenarios where, hey, you know what, it might make sense to keep some life insurance through retirement?
You know, there are some families that we were talking earlier about how during your working career, when you're paying down your mortgage, you're educating your kids, launching them from the nest, you are essentially reducing your life insurance needs slowly but surely as you pay down the debt and as you accumulate assets, as the kids get older, all of that. But what if the kids are not always going to leave the house? There are some kids that maybe have some special needs, that maybe some learning disabilities, some dependencies that might cause them to still be living with you well into adulthood. And if you were to pass away well past, the high school or college years, they may still be dependent upon your income, whether that's your Social Security check when you're in retirement or your paycheck when you're still working. And so this need for life insurance might extend longer because of a special needs type of a situation. And this might be a situation where using a more permanent type of a policy to protect or fund these needs can make sense. And that could stretch well into retirement. It's just another scenario to consider.
Right. And you could say, hey, I want to make a provision. If I had 3 children and one was special needs, I want to make a provision for my special needs child, but I don't want to have that impact the inheritance to my other 2 children. And so you say, well, that's one scenario. The other is, as we had mentioned earlier, hey, if my spouse dies and I remarry, I'm likely going to be taking care of the special needs child for the rest of my life. So can there be assets left to provide for my special needs child and to make a provision for my next spouse?
Yeah.
Mm-hmm.
Yeah.
Yeah, that blended family, the next spouse situation, man, right after losing your first spouse, maybe that is like not even a thought, right? Mm-hmm. But time goes by and you realize that, there are new friendships that can be formed and maybe new romances that start. That might, again, feel weird to think about, but it does happen so often. And when you do have a blended family, that scenario, making sure that you don't accidentally disinherit your children from your first marriage, mm-hmm. while also still providing for the needs of your second spouse. And so life insurance might be a way to provide for one group's needs and then pass along the other assets that you've accumulated to other beneficiaries, essentially.
Yeah.
It's another version of the scenario that we talked about in an earlier segment there.
We haven't touched on a few of the traditional scenarios. I mean, one of them is some advanced charitable giving. If there's a cause that you really care about and you want to leave a legacy, getting some life insurance and having that be, especially if you've got, and I'm not saying that the kids are greedy or whatever, but if you have a cause that your entire life and part of your purpose has been to support and perpetuate and that's a calling for you, it may make a ton of sense to want to leave some resources to that cause when you pass away. Well, if you're leaving a chunk of your inheritance, of your estate to this charity, the kids might say, oh gosh, that feels that I don't. They might have some feelings about that. I don't know.
Like the charity is competition.
Yeah, wait a second
The
here.
sibling
yeah,
they
come
never
on.
invited
yeah,
or
exactly. And because they might not feel the same way about that organization as you. And what if so much of your time and resources went towards that organization and there's actually some tension there with one of the kids?
So
Right.
cool strategy there would be if you had some assets in retirement accounts that have never been taxed, if you leave those to the charity, because they will receive that money and not pay the tax that has been built up and has been deferred there. Your 401k, for example, if it's never been taxed before, someone's going to pay tax on it. It could be your own kids. They're going to pay tax at whatever rate, whatever tax bracket they're in, or you could leave it to the charity and replace that inheritance with life insurance.
That's right.
Ultimately, it's a way to disinherit the government,
Yeah. Right.
which who doesn't love that?
So charitable planning, life insurance obviously is a tool for that, and the type that you would need is permanent. And then the other is planning for estate taxes. And with the recent tax law changes and pushing the estate tax exemption up significantly higher, well, first of all, making sure that it didn't sunset and revert back to a much lower threshold, but actually pushing it higher. This is fewer and fewer folks, but at the same time, you don't know the tax law changes that could come down the pike out there in the future. And so if you are either because you've stored up a significant amount of wealth, or you've got some privately held either business or whatever, it might make sense to hedge against some of that and have some resources that are become liquid at your death so that they're there to pay estate taxes. Now, there are ways to structure this in special types of life insurance trusts to have those dollars carved out and not be part of your estate. If you don't do that advanced planning, these life insurance proceeds could actually make the problem worse,
Right.
because they're added to your estate, increasing the estate taxes, right? So working with a professional certified financial planner, that's probably not DIY, right? Working with a
Right.
CFP.
No. That's advanced planning, and this is where you say if it's in an irrevocable life insurance trust and it's outside of the estate, there's going to be $1 for every dollar. And these are typically for if I've got a farm and lots of land, if I've got a closely held business, and I don't want to sell those things to pay federal estate tax. Mm-hmm. Because you're right, if I keep that in my estate and it's not outside my estate, I'm going to receive 60 cents of every dollar. So on $1 million life insurance policy, the beneficiaries would get $600,000 because of the tax burden.
Mm-hmm. Yep.
You know, there's one more situation that might be a cause for still wanting life insurance in retirement, and it's for those who get it to retirement and still have a mortgage. I was doing a little bit of research, and it's somewhere north of a third of retirees can still have a mortgage, with the average balance being over $100,000. And that may be fine as long as you've got 2 Social Security checks rolling in and you're able to draw down on your retirement assets to afford that mortgage. Maybe it's working just fine as long as both spouses are still alive. But if one of you passes away fairly early in retirement and a Social Security check goes away, maybe that becomes a little bit tougher to handle that mortgage, and to have some proceeds to just wipe it out, finish up the repayment process there, maybe creates a little bit stronger position for that surviving spouse.
Yep. So there are reasons. And Kevin said it earlier and said it very well. Life insurance is a tool. And so you might have, it often can be sold. And so you might be jaded. You might have some scars or scar tissue from some poorly used life insurance tactics. It's a tool. It's a financial tool. Work with your certified financial planner who is you're a fiduciary and looking at all 6 areas of your financial life and the goals that you're wanting to accomplish, multi-generationally, and see, well, is there a risk here to manage against? All right. That's all the time we have for today. On behalf of Josh Gregory, Kevin Korhorn, all of us at KFG, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. The advisory services offered through KFG Wealth Management LLC, doing business as Korhorn Financial Group. KFG Wealth Management LLC and Silver Oak Securities Incorporated companies are unaffiliated.